I think it's at this time that I revisit the 3 bar reversal pattern one more time. And this time, really just building a trade system specifically around that short bias only. So basically, a shorting strategy using the 3 bar reversal. Um, I've been looking through a few charts, and even though I'm happen to be looking at Bitcoin right now, I see this thing reacting in spectacular fashion to a very high degree, to a very high success rate. So I'm going to go through a few of them that I pulled out. I don't know, 3, 4, 5 of them that I pulled out, and I want to show you why I feel compelled to build this strategy. So once again, I'm going to start with the rules of engagement, and I'm going to show you how I intend to incorporate this and start to build these trades out. And hopefully over time, we can just document the results of it chronologically and capture them and log them and continue to try to see if we can build. That being said, again, rules of engagement stipulate a identifying in this case, it's going to always be a bullish engulfing candle. Okay, bullish engulfing candle followed by a reversal candle, which you see right here. The reversal candle, usually going to be a doji or a shooting star. Doji or shooting star, wick, higher price action to the upside on the wick. Okay, and the failure. Then after that, the third candle, after that one closes, that's your trigger bar telling you it's time to go. Your entry will be after that third candle closes. Remember, this is the 3 bar. So bar 1, your engulfing, your reversal, and your trigger, and your bias, hopefully. You don't really want to go unless your trigger bar closes in your bias, in this case, bearish. That's your entry. Your target, so we know what the entry is, okay? It's next bar market confirmed by closing candle in your bias, closing below, the price needs to be below your reversal candle. As you see here, this is closing below the reversal candle, and then that's where you're entering at. Okay, so we have the entry down. Okay, the targets are a target, is a 618 retracement from the swing low to the swing high, the recent swing low to the recent swing high, and a 618 retracement. Now, granted, this one doesn't hit. This one doesn't reach the target, but I wasn't going to throw this one out and call it a failed trade because of that. Because depending on the trader, he would have managed this and he still would have got all that action. This is a 4-hour chart, so that would have been 12 hours that he was in that trade, but absolutely would have traded from 81,000 down to about 78,000. Okay, so I still consider that a success. Your risk versus reward, from what I can tell, is still always going to be more than a 1-to-1. So not necessarily a 2-to-1, but more than a 1-to-1. Your stops are always just going to go right above the high. Okay, you don't want it to go too much further, because if it fails, you want to let it fail. Meaning, if when you enter on your trigger bar, if it's a failed pattern and price action goes up to retest and to continue to go up and takes you out, you want that to happen pretty much right around the retest. So you want to keep as much of your money as you can in the case of a failed trade. So we're not using 113 inversions. We're not using ATR based stops. Just put your stops right above the action at the top. Your entry is going to be at the close of the trigger bar, and your target is going to be the 618 retracement from the low to the high. You see, this would have been a winner, but he didn't quite get to the 618. But that doesn't mean it's a loser. That just means that you would have taken half of your position, your profit, at some point in time. Maybe even just took it all. Okay, even though you really want to get to target, you really want to hit that 618 target. And then as I'm going through this breakdown, I'm going to show you why you really want to get to target. That was example 1. Let's move over to example 2 right here. I'm going to take this off for now. Okay, so same thing. Identifying your bullish engulfing candle, right? It's always going to be a bullish engulfing candle. There's your reversing candle. And again, your shooting star. Wick price action up, okay, for this failed candle. Okay, then your trigger bar. In your bias. All right, so watch how all the criteria is being met every time. Okay, remember, After your trigger bar, you can go. So the trader would have actually went at that point. The trader would have went at that point. He would have had to hang around for a little bit. It wasn't immediate price action, right? But he's in the trade. Price action is dancing around, scaring him a little bit. And then once it's over, price action rolls. Okay, price action rolls. Okay, remember, entering at the close of your trigger bar and then a 618 retracement from the low to the high. This is always going to be the same. Listen, you do not have to tweak or change what I'm showing you. You don't have to tweak or change it. Don't get upset because this one here even went past the 618 and there could have been more money, a lot more money on the table, right? Don't, because this is a 786 down here too. I brought on both. I brought on the 618 and I brought on the 786 just for the sake of what I understand about Fibonacci. But you don't want to get upset and think that you left meat on the table because this one went all the way down to the 786. Your target is a 618. You don't want to play around with this because if you notice, he wicks down to it, price action comes down to it, and he starts reversing, meaning your price action starts getting sucked up anyway as this trade is over and complete. You don't want to get caught up in this unnecessary volatility down here, okay? Just 618 and you've won the trade. And once again, it would have looked like this. You would have entered at the close of your trigger bar, okay, next bar market. You would have entered right there. Remember what I said. Just don't keep your stops too high. Put them right above the price action because if it gets violated, you don't want no parts of it. You want out, okay? And then your target was the 618 in this case. Now look how some of these trades form out. Okay, and I want you to go find me another system, another strategy that works like what I'm telling you. In this case, this is almost a 3-to-1 to get down to the 618. Because remember, the target is based off the low to the high. So if it's long enough, then you're going to get a long 618 retracement, setting up trades that look like that. And you see that would have been a success. No drawdown, no nothing, just a little bit of weight. So your trade psychology is going to come into play, okay? It's going to be a set it and forget it, meaning once you get in, once you've identified, you waited and you watched this candle close or whatever, you had an alarm set. Let's say we went over here and set the alarm. A lot of people, this might be a way to kind of, like if you're on a larger time frame, because you can do this on any time frame, even from 1, 2, 3, 5, 10, 15, 1 hour, 2 hour, 3, 4, day, week, month, okay? It's all the same. The market moves the way it moves. It continues to do these things no matter what the time frame. So I would suggest if it's a larger time frame and you can't, right, you don't want to sit down and wait, you know, you can set an alarm here. You can set an alarm here, and this will tell you when it's crossing alert. Add alert. So then you'll get an alert on your phone telling you that price action is crossing that level. And then you come in, look, check it out. And then in this case, you're just going to take how many, depending on what you're trading. It could be a stock, it could be an ETF, it could be an FX pair, whatever it is. This is a short strategy. And then you hit sell, and then you're going to come. You already know your stop is going to be right above the price action. Run your retracement from the low to the high, identify the 618, and that's where you're going to put your target at. And you see how beautiful that would have worked. Moving on. Okay, here's another one. Okay. Move that out the way. Okay. Engulfing candle, bullish engulfing candle, reversal candle. All right. Reversal, wick up, right? As also in our bias too. Trigger, closing below it, right? Remember, the trigger bar needs to close below your reversal candle. So that's your entry at that point. Okay. That is the entry. You're going next bar market. When that closes, you're in there, okay? You got your entry. You know you needed to wait until you got a candle to close. That's confirmation below, creating a lower low, then your reversal candle. And then your target is a 618 retracement from the low to the high, okay? This does not change, okay? And if you notice, price action comes down, dances around, makes you a little nervous, and you do get it several times. Let's call it. Let's call it this guy right here, okay? You do get your trend down to the 618 because this is how the market moves, especially on a reversal. Again, nothing changes. Your stops go right above the price action, right above the high. Your stop's right above the high. Don't put it on it, but just put it slightly above it. And your target is the 618 retracement from the low to swing high, 618. Okay? I hope you guys are following this. I don't think anyone's come out and given you a strategy like this that you can deploy this with this level of simplicity. Okay? I will tell you this. You can't break the rules. If you don't have it, you don't have it. Okay? It does work in both directions, right? If we looked at, I'm gonna finish where we are, but I just wanted to say it does work in both directions. But I would just use it for shorts. Get the shorts down first before you start looking at bearish engulfing candle, reversal, doji like, and then your trigger bar. But in this case, you would not have been able to enter until right here. That would have been okay because it's below your doji. You'd have been entering here. You would have had a scary second here as he pulled back. But because this works, it's still a winner. It's still a winner. And entering right after the close of your trigger bar, this trade would have looked like this. Now, the problem is, like I said, stops right below it, okay? So the problem is, how far can you go up? It's going to be the opposite, okay? You're just going to go to the swing high to the swing low, okay? You're going to retrace from the swing high. You're going to have to look left for this. Swing high up here to the swing low, okay? And you still would have been looking at 618, meaning right here. And again, once again, don't worry that it looks like there could have been more. Don't worry about that. The trade was over. Okay, as you notice, price action rolled back over. So I did want to just throw that in there to show you we are going to come back with the bullish strategy. It's the same thing. In this case, this is a 1-to-1. That's fine. Still a winner though. Okay, but it's just the way that, you know, the trigger bar kind of pushed up a whole lot more than we like. Let's get back on our bearish side. Let me take the market off. Okay. And again, here is that the one I wanted? Here's our engulfing candle. Okay. Here's our reversal candle and our bias. We don't get confirmation, right? We don't get confirmation closing lower than it until this guy right here. Okay. That's the entry. Okay. That's the entry. And then you're in the trade and it rolls over. Remember the targets. Let me clean up a little bit. So I want to have fibs everywhere. The targets from the low to the high. So grab the fib, low to the high. Now remember, the target is a 618 retracement. Okay. Don't care that it went a little bit lower because you don't want to get yourself in trouble. The trade is essentially over. I've said this a million times. As you see that after that, who cares about this junk, this trash, this noise? Price action would have reversed on you. Your job, your task, okay? It's like a mission, okay? Get in and out. Your job is to get in right there, next bar market, after your confirmation candle, meaning closing lower than the previous, with stops above the high, right above the high, with a target at the 618. You got your 1-to-1. You got your trade. You're not always going to get a 2-to-1. Okay. But if a 1-to-1 is your minimum, right? Your minimum criteria is trade must be a 1-to-1, then you might have to adjust. It's at your discretion. But I think as long as you're inside of your rules, as long as none of the rules are broken. Okay. So don't break rules. Don't break the rules. Let's see if we got more. So let's look at this guy right here. Let me take this box off. Okay. Bullish engulfing candle. Reversal, doji like. Rejection candle basically. I understand there's a little bit of static. But you do get confirmation. Right here. Okay. Closing lower than your reversal candle. All right. So your entry is right here. Your entry is right here, right? Your entry is right here. And then once you got your confirmation, you're looking for a 618 retracement of the low, look left to the high, retracement from the low to the high. Now this one is going to piss you off a little bit, okay, because he dropped so low. But your job, if you're entering right here, I understand there was a lot more meat on the table. I get it. Stops above the high. I get it. 618 retracement. This time a 2-to-1. Okay, a 2-to-1 trade on this one, which is good. You got to, here's the thing. You got to be happy with that. You can't be upset that there was more. I get it, that because that's why we have the 786, because that's the next important fib level. Listen, it's still the same thing. I understand it moves some more, but this trade was over. You come down into it, you start dancing sideways. Yeah, you did go probably 886, probably even lower. But the fact of the matter, the trade is over, and then price action starts to go the next direction. But that shouldn't matter to you because you've already won. You already crushed it. All right. So did we do any more? Yeah, we did one more, and I think we'll be able to wrap it up after this. Yeah. Okay. So we're going to burn this in, and you're going to put this in your toolbox, and you're going to be one very happy trader with this one strategy if you choose and if you can get it down. Bullish engulfing candle. Remember, this is a short strategy. Bullish engulfing candle. Reversal, indecision. Okay, reversal, indecision. Wick high, wick low, doesn't know which way to go, okay? It doesn't matter if this one happens to be more of a 4-bar reversal because you didn't get your immediate reaction, but you still get your trigger right here. You get your confirmation closing lower than both of them, okay? And that's your entry. Trigger bar and entry. The second, you didn't get your trigger bar immediately. You had to wait another candle just in this example. It doesn't throw away the basic principles, okay? It doesn't throw away the rules of engagement. This part is all about confirmation and entry. Okay, so you're entering right here, next bar market, after you finally get your confirmation closing lower than that. Okay, your price action, of course, is going to be short. Okay, your target is going to be the look left. Remember, look left. Your target is going to be swing low to swing high, and it's going to be the 618. Okay, so you come down and wick, and you're out of there. He wicks. Yes, he goes deep. He goes, yeah, he jumps, he dives. That's a deep, deep probe. But by it doesn't matter. He sucked it back up anyway. So you absolutely want to be out of there because the price action sucked back up and went the other way on you. The trade was over. At this point right here, the trade was really over. And you, watch this, already won. Short entry right here. It's going to be the same thing. How many did I give you guys? 6 or 7 of these, something like that. Stops right above the action right there. Target to 618. Bam, wick action is what's going to come give it to you. And you are good. So 2-to-1 on that one. That's your job, okay? So that's deploying this short strategy using the 3-bar reversal pattern. I don't think we have to do too much. There's no questions asked. Okay, there's nothing else to see here, right? We don't want to overcomplicate this. We don't want to add stuff to it. If you notice, I didn't even mention CTS, Combined Technical Score. I didn't even say, is it overbought? Now, of course you want to always look at that. I just didn't put it in here because when I was looking through the history, I didn't even really notice it. But if I were to add that in, yes, you will see the overbought condition. So I will suggest add that to it. So in this one here, you do have the overbought condition and you do have your bearish divergence. So go ahead and add those in there. It doesn't make sense to leave them out. So I got to with your bearish divergence. So let's see what else. Let's go to the next one. Overbought condition with bearish divergence. Rinse and repeat. Look at that. Overbought condition with bearish divergence where your trade is taking place. Okay, let's go again. Let's go again. Where our trade is taking place, we don't have it this time. We don't have it, but nope. Yep. Nope, we don't have it, but the trade still worked. Right here, nope. What else this time? This time we have it. We have it on this one here. Okay, we have our overbought condition with bearish divergence on that one. And let's check this one here. We don't have it. So that's, you can add it. You know, you can add it and you can go buy it if you need to. But I think you guys have it. I hope that you took some good notes. Bookmark this one, pull it out, watch it as many times as you need to. To be honest with you, as many strategies as that I know and the things that you guys see me do with the advanced patterns, the harmonic patterns, double tops, double bottoms, A to B is equal to CD, 2618, all the things that I know. To be honest with you, I gotta put the 3-bar reversal at the top. So hope you guys enjoyed this. Hope you found some value in it. Share it with anyone that you know, any trader that you know that it could help. Subscribe to the channel. Hit the bell icon to get notified when powerful videos like this come up. Okay? Give this one a thumbs up. The Harmonic Trading Club, giving you the best that we can deliver so that we can even this playing field. Okay? You guys take care. Be safe in the market. Good luck with this one, and I'll see you on the next one.